Good morning, everybody, and welcome to Wednesday, March 6th. And I'm glad you could join us today as we talk about what's happening in our U.S. economy and what's happening with earnings this morning. Hold on just a moment. Dave will be with us momentarily, and we'll get this show on the road.
5.7 Light FM. Them be the romantics there. My name is Morning Dave. We're at 8:40, 20 before 9. Time to check in on your money and see how that's doing this morning. We kind of had a turnaround yesterday as well on the stock market. Let's figure out what's going on this morning and see what we're going to see. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Yeah, we ended up kind of down a little bit yesterday. Better than where we were midday, though, because midday it was kind of free falling there for a little while. And
Understood. We had some good news. The housing information kind of bailed us out of what could have been a really bad day, I gather.
yeah, I think so. You know, new housing starts or new home sales beat the estimates by about 28,000. We had 621,000 new home starts or new home sales. I'm sorry, last month. So that was a surprise there.
And it's kind of a relief, too, given the fact that basically all we've gotten out of the housing industry has been not necessarily good news of late. It's kind of nice to have some positive news for a change, even though it is just a data point.
Yeah, that's true. We have mortgage applications on the rise too, so that's a good sign.
That's
Um,
also nice to hear.
yeah,
And we start this morning out with trade news that sometimes gets shrugged off by the market. But boy, this was a change. We don't know what the market was expecting because estimates and predictions are all over the board on that. But trade deficit for this nation hits a 10-year high last month, up 18%. We bought 1.9 or we bought 2.1% more from overseas than we did before and exported 1.9% less. This tariff thing just isn't working out the way we were expecting it to, is it?
no, it's not, and so you're right. Those numbers are not favorable for us, and the U.S. trade deficit, was expected to increase by about $57 billion. It came in and it was almost $60 billion. So that was a huge increase. And like you said, we are at a 10-year high when it comes to the trade deficit. So, it just you thought that the tariffs and stuff would have helped us a little bit, but I guess because they haven't really put them all in full force, we're not seeing the benefits.
Understood. And yeah, before we got into this entire conversation about foreign trade and tariffs and everything, historically, the stock market has kind of shrugged off the trade deficit numbers. But given the fact that it's been front and center on the national conversation, I've got to believe that it's going to, at the very least, affect the market a little bit, only because wait a minute, it isn't working the way it's supposed to.
Well, I would think so, and that could be what's putting a little bit of extra pressure on the markets this morning. But we did. I'm thinking when I look at the numbers, I'm not impressed with what I'm seeing. And then we have the ADP numbers come out today too, Dave, and
Yep.
and they weren't too bad. I mean, they came in at 183,000 for February. That's about 2,000 jobs less than what was expected. But they had a huge increase revision when it came to January's numbers, up to 300,000 from 213. So some good things coming there. But Moody's economist, Mr. Zandy, said, you know what? We've hit the high watermark when it comes to jobs. We're not going to see these kind of numbers going forward. He doesn't believe.
Understood. And ADP kind of confirmed that the narrative with their report this morning said that private sector hiring is showing a slowdown, and that's obviously not what we want to hear right in advance of the federal government report on Friday. So we start out today with kind of a mixed bag. The ADP kind of parallels a lot of the financial reports we get out of companies. The news itself isn't bad, but the guidance isn't very positive.
Well, you're right. We've kind of got a mixed bag this morning because we've got some good news on retail side, and then we've got some not so good news on a couple other fronts, Dave.
Yeah, we got that. Let's start. There was one bit of news tidbit that doesn't necessarily reflect a quarterly report. Dollar Tree bought Family Dollar last year. Everybody remembers that. Well, they turn around after they bought the chain. They announced they're going to close 400 Family Dollar stores and rebrand the rest of them. Sounds like one of those corporate raider stories, doesn't it?
Well, here's the deal. They're calling that the store optimization program that they announced. And so, they did report earnings. They beat by a penny a share. Revenue was also topped the forecast. They didn't give us the same store sales this time, but they're trading up a little over 3.5% this morning.
And they call it what? Store optimization program.
Yeah, doesn't that sound like a good, catchy name?
That's kind of like calling a garbage man a refuse technician, isn't it?
I guess. It's one of those things, and that's just the start of when we come into retail. We've got BJ's Wholesale coming in at 8 cents better than expected. Their revenue also beat forecast. They saw same store sales increase by 2.9%, which was expected. That was a number that everybody was looking for, and so they're trading up almost. They're getting up close to 5% right now. So some good numbers on that retail front. We also had some really good names. Abercrombie and Fitch came in. They beat by 20 cents a share. Revenue beat forecast. Their same store sales doubled for this last period, up 3%, which was you got to say that's pretty good for them. They're up. They got to be on your big winners list, Dave. They're up almost 12% this morning.
That's a big gain. Yeah, it's also interesting because Abercrombie and Fitch has been having trouble repositioning their marketplace position. It sounds like they might have found it, right?
Well, maybe they've done something to kind of revitalize that pocket there. And then we had we talked about Dollar Tree. So we had a little bit of a little oops here with Urban Outfitters.
Mm-hmm.
Urban Outfitters, they beat on earnings per share, but they came in and said, that their 2019 got off to an unexpected slow start. And they said they made some costly mistakes this year, and so they're trading down about a little over 2.5% this morning. That actually, they're going to be at their 52-week low where they're going to open right now.
Nothing like a mea culpa on your quarterly report to tank your stock price, right?
Exactly. Hey, another popular store, at least around here, Ross stores.
Yeah.
They beat by 7 cents a share. Revenue beat estimates. They're taking a little what they call a prudent approach to 2019, noting that they're seeing some tough comparisons. I guess that they did really well last year, and so they're kind of I don't know, lining the pockets there, making sure that people understand that, hey, don't expect that out of our stores this time. They're kind of laying that ahead of time. They're trading down about 2.5% this morning.
I was going to say something prompted their stock to go down after beating on the street, doesn't it?
Yeah, it does. Now I got two stocks that are down today. One of them is because of an earnings report, and that's Thor Industries. Now they're the people that make recreational vehicles, and they missed by about 40 cents a share. So not good there. Revenue also missed their forecast. They've had some issues with market demand, trying to make manufacturing and market demand kind of match up, and they're trading down about 4% this morning. And I got to think that GE, we talked about GE last week and how they had a decent quarter. They had some good things happening because somebody was buying out some of their stuff. Well, JP Morgan came out this morning or yesterday after the market closed, and they revised their price target on GE down to $6 a share. Yeah, that was a big. I mean, Bank of America, Merrill Lynch, they downgraded them to $12 a share. So there's a big disparity there between what some of the analysts think is going to come out of GE, and they're trading down a little over 5.5% this morning.
I'm just kind of betting that J.P. Morgan is not getting a bouquet of flowers out of GE corporate offices this morning, are they?
I bet not. And then, as we finish up, Dave, I just wanted to ask you, if you put your name on the list for that new hypercar by Batista, I figured you probably did. It's only $2 million. I figured you could take care of that.
Well, I got about 20 bucks in my pocket. If you chip in 20 from yours, maybe we can make a down payment, huh?
Hey, it's supposed to be faster, accelerate faster than an F-16 jet.
Good Lord. That
And
at least you could get out of the way of traffic on 27 with one.
yeah, and it's electric.
Acceleration like that out of an electric?
Yeah, yeah. They
Wow.
said it hits like 61 miles an hour in 2 seconds.
Yeah, you could make a left turn that way. It works. So to set us up, yesterday turned out to be a little bit of a decline, although it was more kissing your sister than anything. I mean, when you talk 13 points down on the Dow, we're talking about a going nowhere day. 45 minutes before we open this morning, the retail sector ought to be feeling good, but we don't have good news from a lot of the other stocks. Which way we pointing 45 minutes before the real money gets thrown around, Phillip?
Well, we're still heading down. We've seen a little bit of an improvement this morning since we've been on the air. The Dow's down $44. The S&P 500 is down 3.5. NASDAQ's down 6.5. We've got gold and silver ticking up just a tad. And crude oil is nicely slipping a little bit there, down 1% to $55.98 a barrel right now.
Did we get that inventory report you were talking about?
I
Or is
did
that
not see it come out yet.
I was wondering if something pushed it down, because under 56 is kind of a nice sight for a change on crude oil, isn't it?
Yeah, it is. Let's see if the gas prices come off $2.50 a gallon.
Absolutely. Looking overseas, Asian markets mixed this morning. Europe as well, really no trend either direction. Phillip, getting some guidance on how to make retirement work for the family out there? They need some expert advice. How do they find you on the phone?
Devin, give us a call at 382-0037. Follow us online at our website at statlerfinancial.com. Follow us on Facebook, Statler Financial Services, where we repost this video every morning. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 7:30 a.m. And now we're streaming it live. I love it, Dave.
All right. That's at newstalk730am.com, by the way, to find that. Phillip, thank you so much. I'll meet you at the car lot, all right?
All right, buddy. Talk to you tomorrow. Well, I want to thank you for joining us today. I hope you found the information useful and informative today. Hey, if you like what you see every morning, like and share our page at Statler Financial Services, and then share this video every morning. We would really appreciate it. Have a great day, and we look forward to speaking to you tomorrow.